When you take the average daily volume of the Shanghai Metals Exchange and the Shanghai Gold Exchange, which has increased 200% in the last 60 days, it has overtaken the Comex to number 2 in the world in volume behind the LBMA. This is not a little pissant place. This is a very substantial market. When you talk about how much metal is flowing in and out of here, you just had a report by the Financial Times saying that especially what is being accumulated by Russia and China is massively underreported. You had analysts from the Bank of Montreal just say the exact same thing, that the numbers are vastly underreported. But let's talk about something for a moment. First of all, let's talk about the LBMA. They publish monthly reporting, trading volume. And as I mentioned, 800 million ounces of silver, 500 million belong to the ETFs, 300 million ounces left over. Yet they trade roughly 292 million ounces of silver per day. This is just the LBMA. 292 million ounces per day. These spot contracts, as they're called, which are basically promises by the bullion banks, represent 90% of all the trading there. So yeah, I'm Standard Chartered Bank or I'm HSBC. Sure, I'll sell you whatever you want, but I don't have it, and you don't have to pay for it. We're going to pretend, right? I'm going to pretend that you own it, and you're going to pretend to pay for it by maintaining a margin account. Well, if you want delivery, I'll give it to you, but let's just hope everyone doesn't want delivery. Ask Bernie Madoff how that worked out when everyone wanted delivery or everyone wanted to receive it. The Ponzi works great in a fractionalized system when not everyone wants to take it. Now they also trade 20 million ounces of gold a day. Well, let's put that in comparison just to give you a perspective. Remember I said you have to deposit a bar in Shanghai gold in order to pull a bar out? So their average volume is 300,000 ounces because it's real and you take possession of the stuff, right? Whereas now, if you're in China or you're part of the team, you can probably take it and go do whatever you want with it. But to export it, buy it and export it like they do off of Comex, no, you got to deposit a bar first. So they're doing 300,000 ounces in real stuff. And let's not forget that when you take the average daily volume of the Shanghai Metals Exchange and the Shanghai Gold Exchange, which has increased 200% in the last 60 days, it has overtaken the Comex to number 2 in the world in volume behind the LBMA. This is not a little pissant place. This is a very substantial market.
I just want to pause right here, folks. I hope you are enjoying this clip from the full episode. If you guys wanted to check that out, I will link it in the pinned comment. But Andy Schectman is the CEO of Miles Franklin. We have incredible deals right now going on. Kangaroos, 310 over spot, 10-ounce bars, 225 over spot, Buffalo rounds, 235 over spot, 90% silver, $3 over spot. We have gold, platinum, palladium, you name it, we got it. So if you want to support Andy, support Miles Franklin, and support myself, then email me, slayer@milesfranklin.com, or call me 330-485-6172. I'll be looking forward to helping you.
And there was a survey done in 2011 with the bullion banks where they said, well, the numbers are actually 10 times what they're saying. Because if I am a bullion bank and I sell you 20 contracts and buy 5, the net result is 15. Excuse me, let's do it this way. If I sell you 20 and I buy 10, the net result is 10. And so they only count that as 30 contracts. They take it as only 10. So all of these trades, they're not reporting that are being settled. And so they estimate that it's at least 10 times the trading volume on the LBMA than what they report, which would mean they're trading roughly 292 million ounces of gold a day. And excuse me, I take that back. That would mean, let's back this up. In terms of gold, they would be trading 200 million ounces of gold per day. 200 million ounces of gold per day. And in silver, 2.92 billion ounces of silver per day on the London Metals Exchange. And in essence, they've admitted this. The LBMA has admitted this. And so when you talk about trading 2.9 billion ounces of silver per day on the LBMA, that's 3.5 times yearly production in one day. This jig is coming to an end, and I think these countries realize this is how we beat them. We beat them by taking physical possession. Now, let's talk about silver for one moment. I believe that these banks came there to beg them for help. And if you look at the export numbers in silver since the second week in March, they've fallen straight down. I believe there's a quid pro quo going on. We don't know what agreement they agreed to. It's not being done out of benevolence. Can assure you that. But they're doing something to get silver so they don't default, if I had to guess. This is the gist of David Jensen's interview, which I found to be fascinating. And, look, the act of permitting all of these paper claims on the market creates an environment where the ability to manage gold and silver's price rise is accentuated through the creation of all of these artificial contracts. And in a period of time, remember I was saying you can push it in the direction it's going. Back when no one wanted to challenge the dollar, no one wanted to accumulate commodities, no one was looking at the world the way they are now, it was easy to do it. Now they're in large part being called under the carpet, to your point. All of that gold being delivered off of the exchange, all of the gold being delivered to the exchange off of Comex, all of the silver being drained by all of the exchanges. Slowly and methodically, they are using the Western suppression against them. They are not doing it in a haphazard way. They are not doing it in a shotgun style to cut off their nose to spite their face. They're methodical, they're regimented, they are slowly draining the exchanges. And when you see all of this activity being done over the Memorial Day weekend when the American public doesn't have access to the market, why, it only makes it a little bit more compelling as far as I'm concerned. But yeah, dude, I don't look, I just think the bottom line is simply this. Knowing that you can't really export gold out of China without first putting your own bar in there ain't going to work, but you can export silver. And all of a sudden, big bullion banks start showing up, the ones that are naked shorting the market. And you can see in the inventory numbers which are dropping in both gold and silver, but silver mostly since March, that this is real. And there's going to become a moment where these banks start eating one another, where it's every man for himself. And I guess this is just the beginning, if I had to guess. But I'll let you comment, and then I'll tell you what Jeffrey Curry had to say about all of this to kind of support and back things up.
Yeah, I mean, ironically, some of the most popular comments or questions, I guess, that were pushed towards you are about this same exact topic. I try to let people understand that this is real. There is not an equal 1-to-1 ratio. Like, if you can't hold it, you don't own it. And I've always stuck with that motto. Like, if you can't hold it, you don't own it. And that ounce that you are holding, someone else thinks they own it too, but they don't. I feel like people don't understand that facade or how dramatic it really is. So what were you mentioning?
Well, I was going to mention Jeffrey Curry, but I can take some questions and we can come back to Jeffrey Curry. That's fine.
Oh yeah, because since we're still on the topic, this person says, at the current rate of silver moving off the Comex, how long until available for delivery is depleted?
I mean, who knows? Those are impossible to answer questions. So what if questions are impossible to answer?
Yeah.
But the fact that we're seeing drawdowns in the Comex, in the ETFs, in the LBMA, now the Shanghai Exchange, tells you that, little by little by little, and then that all at once moment, well, it's coming. The inevitability of it is. And that's what I think is the important thing to think about, is that who cares? I mean, and I don't mean to dismiss the question. Everyone would like to know, but who cares when you know it's inevitable? And I think the inevitability of things it necessitates the preparation. And if we knew when, if we all knew when we were going to die, well, it would make buying life insurance a lot easier and getting our affairs in order earlier. But the inevitability of it necessitates, as we get older, to start preparing. Well, I would say we're getting older as it relates to this market and the ability of the West to continue to suppress things. And I really do believe that more than anything at all, that the Western system is of price setting is coming to an end. And I think the trend of metals being determined by the Western institutional investors is breaking down. And this flow from west to east, it's real. So know that, what starts out slowly and methodically is already increasing. Look at the price of the difference in the arbitrage. Like, it was $2 when it started. Silver was $2 higher than in Shanghai than in the West, and then $3, then $4. Now we're at about $4.30. Does it keep going higher? Does it go to $5, $10? They're not making it easy on the West. That's for sure. If they are coming asking for silver, they're going to pay a hell of a premium. But I do think that this is something that will just continue to evolve, and the when is impossible to ascertain. But the it happening, that's not. I think you can see it is
Yeah.
happening right here in front of us.
Yeah, that's the important part. And like Ted Butler always mentions as well. It's like this will happen. It cannot go on forever. So this person says, Andy, is the reporting that silver purchased in China at the higher price range can only be redeemed in China? And how big of a factor is the west to east arbitrage scenario?
Well, yeah, I mean, that's the price they're willing to pay for it for now. You would not want to buy it at that price in China and redeem it anywhere else, and vice versa. If you had your druthers, you would buy it here and redeem it there. That's being
Yeah.
done by design. That's how they do arbitrage it. They say that the price, and I think, quite frankly, if you ask them what the real price is, they would say it's way higher. But fugazi is what they would say if they spoke Italian. But
Hmm.
Italian slang, but I think that this is how you steal basically the metal from the West, not steal, but pry away, because they're paying a hell of a premium, and the traders who can access both markets are doing just that, to arbitrage. And but how real is it? It's very real, and it's very serious. The United Kingdom published a report, the government did a year ago or so or less, that said we're really in a bad place in Great Britain, because we're so reliant on all these other countries for so many critical things that we need, rare earths and precious metals and certain commodities, and you don't want to be in that position. Well, the Chinese are winning this mineral war. They are. And they are going around the world, not only accumulating everything they can off of the major exchanges, but through the Belt Road. All of the countries that are on the Belt Road and part of the BRICS are massively resource rich. So they come in and they industrialize them. And all the naysayers in the world can say what they want. They are doing things in a cooperative manner. They're not holding a gun to anyone's head. They're giving them the opportunity. Now, if they mismanage the loans that they are making or getting made to them, or 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 doing things that some people say is not making the Belt Road as glamorous as some would say, I disagree completely. They are uniting what is right now almost 80% of human population in a growing coalition. And you put it together with the BRICS and the Shanghai Cooperation Organization and the Eurasian Economic Union, you're talking the majority of human population, three of the four largest nuclear arsenals, the majority of global GDP, the majority of the world's shipping lanes, the majority of all the world's commodities, all of them, from food to rare earths to, and then they go out and the Chinese buy the LME, the London Metals Exchange, which trades all the base metals. I mean, you can see it's happening. If you don't, you're going to really wake up a victim. And I think trying to time this is about as foolish as it gets. It's like trying to catch a bullet with your bare hand. It's just not smart.